This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices rose on Wednesday after Israel attacked Hamas leadership in Qatar. Poland shot down drones and the U.S. made a push for new sanctions on buyers of Russian oil, but concerns over crude oversupply capped further gains. Brent crude futures were up 56 cents, or 0.8%, at $66.95 a barrel, as of 0835 GMT, and U.S. West Texas Intermediate crude futures gained 56 cents, or 0.9%, to $63.19 a barrel. Prices had settled up 0.6% in the previous trading session after Israel said it had attacked Hamas leadership in Doha. Both benchmarks rose nearly 2% shortly after the attack, but then retraced much of their gains.
The European Union is considering a faster phase-out of Russian fossil fuels as part of new sanctions against Moscow, European Commission Chief Ursula von der Leyen said on Wednesday, following U.S. pressure to stop buying Russian oil. EU officials are currently in Washington to discuss coordination on new Russia sanctions with the administration of U.S. President Donald Trump. Trump, seeking to end Russia's war with Ukraine, told European leaders last week to stop buying oil from Russia, a White House official said. He has also urged the EU to hit China and India with up to 100% tariffs in order to pressure Moscow.
Moving on to the top news in the energy sector.
Asia's clean energy push will stall unless governments curb fossil fuel subsidies, offer stable policy direction and invest in upgrading grids, industry executives said on Wednesday. The executives flagged the cancellation of renewables auctions and subsidies to the fossil fuel industry as the biggest impediments of growth in green investments at a time when data centers are driving growth in power demand. Coal continues to be subsidized and power and energy in general continue to be used as a political tool to win votes. And I think that's the biggest stumbling block, Lawrence Wu, Chief Financial Officer for Asia of Portugal-based renewable power firm EDP Renewables, told the APPEC conference in Singapore.
Global natural gas demand is on track to climb by around 1.7% in 2025 after hitting a record high in 2024 as consumers around the world keep using more of the fuel for power generation, transportation and industry, according to the 2025 Global Gas Report released on Wednesday by the International Gas Union Industry Trade Group and Italian gas pipeline company SNAM. The report projected global gas demand would rise about 71 billion cubic meters in 2025 to around 4,193 BCM after climbing 78 BCM, or 1.9%, to a record 4,122 BCM in 2024. The lower growth expected in 2025 versus 2024 was mostly due to slightly slower demand growth in Asia in 2025, the report said. That record demand in 2024 equals roughly 11.3 BCM per day or 399.3 billion cubic feet per day. Next, we have the top news in metal markets. The European Commission will propose a new method to curb imports of steel from rivals to protect domestic producers, Commission President Ursula von der Leyen said on Wednesday. Global overcapacity is squeezing margins and leaving little incentive to pay a clean premium. This makes it harder for Europe's steel industry to invest in decarbonization, von der Leyen told the European Parliament. That is why the Commission will propose a new, long-term trade instrument to succeed the expiring steel safeguards, she continued in her annual State of the Union address.
Global demand for platinum jewellery is expected to rise by 11% to 2.2 million troy ounces in 2025, its highest level since 2018, due to a spike in manufacturing in China, the World Platinum Investment Council said on Wednesday. Spot platinum prices are up 51% so far this year after hitting their 11-year high of $1,483 an ounce in July as inflated import demand in China coincided with outflows to U.S. stocks amid tariff concerns and lower supply from mines. A continuing rally in gold prices, which hit a record high this week, has been a big factor as it prompted some Chinese jewellery showrooms to build up platinum inventory amid higher financing costs from rising gold prices.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures dropped for a second session on Wednesday, weighed down by weakness in Chicago and Dalian vegetable oils, while weak export demand added pressure. The benchmark palm oil contract for November delivery on the Bursa Malaysia Derivatives Exchange was down 66 ringgit, or 1.47%, to 4,413 ringgit, $1,046.48, a metric ton at closing. Palm prices fell on weakening Chicago soy oil prices and lower export for 1 to 10 days. Lower Dalian prices this morning also weighed on palm, said a Kuala Lumpur-based trader said, adding the market will be focusing on upcoming production.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.